All right, bros, we're going to be playing in the paint today. I've got a little bit of a presentation. I don't even know if it'll become that. I just put a title there, but um, it's early in the morning, and I wanted to get this out before I forgot, namely before I go back to bed. I just had a consultation with one of you actually to go over some things, and shouts out to you. And last night I had dinner with another Monero bro, and Zano is the buzz. I've got to tell you, everyone's talking about Zano. It's on everyone's radar now. And one thing that is a recurring thought on the behalf of people who are interested in Zano is what are the potential use cases of the private tokens? And we've heard about private stable coins potentially coming out. We've heard about maybe linking private tokens with gold backs and other assets um, in a way where you can trade physical items, privately and digitally, and then redeem those physical items at an ATM or things like this. There are those ideas that are out there. Um, but I was awoken a couple nights ago by this idea, or at least I woke up because of some 3 o'clock dream or demon that was pouncing on me, and then I had nothing better to do. I couldn't go back to bed. I gotta tell you guys, melatonin, it works for a while, but then it really messes with you. After a while, if you become like an addict to it. So I'm trying to actually cut that back, and I've been sleeping better. But a couple nights ago, anyways, I woke up and I thought about this potential use case, and I presented it to the Telegram chat. And if you're not in the Telegram chat, by the way, go join the Telegram chat. The link below. We have really smart people there and serious people. And I presented this, and Roger Ver took interest to it, and some others. And the team thought it was an interesting idea too. And Aaron Day chimed in with what Ravencoin does. And I guess they had a feature like this where you could pay dividends to stockholders of your token. And Roger Ver had an idea where to pay dividends to people who have your token. You just create a buy wall on an exchange and buy back the tokens as sort of like a stock buyback in a way, which I thought was an interesting idea. And then Ravaga, I don't know if I'm saying your name right, but you came up with another potential solution, which I actually thought was interesting, and I'll go over that one because that's the one that I think intuitively made the most sense given the tech that we're dealing with. Although I agree that it can be done in different ways. So my original idea was okay. So let's say that you have a company, right? We're gonna call it Mike's Hard Lemonade Company. Actually, that's like literally a company. So maybe I should do Mike's Hard Lemonade Stand Corp. We'll turn into a lemonade stand. And Mike is maybe like a 10-year-old who just, picked the wrong bottles out of his parents' fridge. So Mike's Hard Lemonade Stand Corporation. Okay. So he doesn't want to go to your traditional markets, um, and your traditional angel investors, and maybe wants to be off grid. And so he wants to raise some private capital. And so he comes up with an idea to issue Xano stocks. And so he's going to issue, let's say, 10 million MHLS shares uh, for a par value of 1 penny. I'm already probably making this too complicated, but ultimately he's trying to raise $100,000 in cash. Makes sense. And so what he does is he mints these tokens, and then he goes on Xano Trade or another exchange where these confidential assets are being traded. Okay, Xano Trade. And he sets the price. And presumably he's trying to raise this money in Xano because in the ecosystem, Xano would be the most liquid token. And so he tries to raise the $100,000 in Xano. And so he ends up selling to, let's say, uh, well, by the end of the issuance, if you want to call it that, the initial token issuance, however you want to call it, the ITO, there are 10 shareholders. Okay, including him. So he's a 10% owner, and you've got nine other owners. Uh, Bear with me. I mean, I'm bad with this freaking thing. Okay, so and then you got 90% owned by other investors, private outside capital. Now, Mike's hard lemonade stand is doing pretty well. Um, he's getting the whole hood addicted to his, you know, luscious drink, and so he's got a lot of money coming in. He's got, let's say, $100,000 that he made over the course of 2024. That's his net income after expenses and everything like that. Now, given we're talking about private marketplaces, it could be that he's got to set up some system in order to get financial statements out there and present that to the outside investors. Maybe he makes like a Telegram and he posts his financial statements every month in the Telegram. Or he has like a Reddit or like a Dread or something like that. I don't know where he puts his information. I don't know if you can have any capacity to audit this information. I don't know if he puts his personal information out there. That's all stuff for people to figure out. Presumably, if you want to attract the capital, you have to have the people trust you. And so the more information, the better. But you want to strike a balance, right? Because we're talking about private capital markets. But let's say that $100,000 is Mike's 2024 net income. Now, because he's a corp, he wants to issue a dividend. And so he's going to do a 12/31 year-end dividend. Okay. So he wants to pay out a dividend of $20,000. He's going to reinvest the rest, but he's appreciative of everybody who has bought his coins so he could raise capital to open up his hard limited stand empire. And so um, he tries to dole this down. My idea was you go into your Zano wallet and there's an option to pay a dividend to everybody who owns MHLS token. Um, Now, I don't know if that's feasibly possible, and I tried to get an answer from the team on that. Um, it may not be actually technically possible, but that would be the easiest way to do it. You know, you pay your 20K dividend, and these amounts are automatically allocated to the people who own this particular token pro rata to all their wallets. Now, I guess Ravencoin has something like this because Aaron Day he responded in the Telegram explaining how this works on on Ravencoin. And I'll read that for you because I thought that was kind of interesting. Maybe this could come to Xano somehow, but this is what he says. Um, and by the way, it wasn't implemented as far as I know on Ravencoin, and that's what he says. But he says the token creator generates a new token. They specify the supply, the name, etc. Dividend distribution. When the token creator wants to distribute dividends, they use some messaging functionality to create a dividend message. And this message specifies the dividend amount. Now, you can send messages through the Zeno blockchain. And I'll get to that in a moment because that'll be relevant. But um, the message specifies the dividend amount, the token to distribute, and the specific token holders to receive the dividend. Um, And the dividend message uses the token's unique identifier to identify eligible token holders. Now, that's the main thing because we're talking about a private blockchain, right? How do you identify who owns these tokens if it's a private blockchain? And I was thinking in the back of my head, maybe it could be something like how the private proof of stake functions, where the private proof of stake probabilistically knows how much Zano people have in their wallet, and they, you know, statistically apportion the stake rewards accordingly. So in a way, the blockchain knows what people have in their wallets, but nobody could observe the blockchain and get that information. And um, I think that's how it works. Okay, I'm not an expert on this. I feel like I should be, but I spoke with Ravaga about this yesterday, and what he said is this. He said, um, larger staked amount doesn't mean you get more rewards in the classic voting power sense. It's probabilistic, where outputs have equal chances of finding the block, but having more of them will get you statistically higher results. So I don't know if that could happen, where you could set it up to be like a stake, this dividend thing, where you don't get 1 to 1, but you get a probabilistic proportion of what the ultimate dividend is. So maybe somebody who doesn't have a lot of that token gets lucky and somehow walks away with a good chunk of the dividend, and somebody may not otherwise, but ultimately over the bell curve distribution, it kind of works out. And if that's the price you have to pay for privacy, maybe that's the price to pay. And maybe because you're using a private capital market, you just pay a higher dividend than you otherwise would if you had a corporation in the public markets or something like that. Maybe this is totally bogus idea, but um, that was how it would work on Ravencoin. And he says that the Ravencoin dividend is paid out in the native coin, which is what you'd expect because it's the most liquid. Um, and everything is recorded on the blockchain, and it'd work a little bit differently because Ravencoin is not a private crypto. It's a public crypto that does token stuff. It's interesting. I haven't ever bought Ravencoin, but that's where Aaron Day is coming from. That's why he likes this for one reason anyway. But that would have been my ideal scenario for how these dividends were paid out. Is it's like a simple thing. Like you go to pay it out of your wallet, it automatically prorated distributes that to everybody who owns the token, and you're good. Now, one of the pitfalls with that is, let's say that somebody out there loses a lot of your token. They just lose their wallet or something like that. And if you pay a dividend, then those amounts would be lost forever and you just wasted money. And that person may never communicate to you they lost their wallet or something. And so there's just money going into a black hole, right? We don't want that. And so this idea that Ravaga came up with, I think, is a good idea because in this case it'll be more efficient, and it'll probably encourage more people to be more intimately involved in whatever uh, stoke I almost call them stokens, stock tokens they're buying. So he says, I think we could use an escrow contract. So the client submits the asset as collateral and some kind of service receives it, checks the provided collateral amount, and responds to the allocated dividend. So um, with the escrow contract, let me bring up a page uh, where I've got that pulled up. Um, let's see. Let's see. All right, so I'm going to bring up some docs from Zano. You could read this on Zano.org in their docs. This is about their escrow contracts. And these could be a little confusing for people who are not totally familiar with them. But once you get your head around it, it's pretty straightforward. But basically, what happens is when you set up an escrow contract, the buyer sets up the contract and the seller accepts it. So let's say you're the person who owns the Zano stock. And you want your dividend, and you know that there is a dividend every quarter or every year or whatever. Um, and what you do is you open up a contract with the issuer of that dividend. Now, presumably, everybody knows who's issuing this dividend, and this person has an alias, which is publicly recognizable, and they're still private, but their alias um, makes it so that everybody knows who they're dealing with, right? Makes it easier to confirm the address, and that's the actual issuer and whatever. And maybe they present this information with their financial statements, wherever it is they're posting information about their company, right? Telegram, Reddit, whatever. And so all of the people who have bought those tokens, they open up an escrow contract. And so what they do is they post as collateral all of the tokens that they have. Now, collateral never goes to the other party. You know, it's like if a Mexican drug gang takes your family and, you know, they're collateral for the drug deal. You know, it's not like they actually want to take your family after the deal is done. It's just you get your family back, but they want their drugs. So I'm sorry if that's a grotesque example. That's just, you know, what people think of when it comes to collateral, I think, in many cases. Or maybe it's just me and I'm screwed up. But anyways, you get the collateral back when the deal is done. That's your deposit amount. So that's what these are right here, if you can see my mouse. So you've got these deposits, and the token that you have, all of that would go into the deposit. And um, your amount, you don't have to include an amount because you're not paying for the dividend, right? Although maybe you could include like a little Zano just to make sure that the contract goes through, like a very small amount, and you'd pay like a little bit of a fee to send the contract. And I think it's like zero point zero 0.01 Zano, which is the average transaction fee for a transaction on Zano. But um, you can actually set time for your contract. So you'd set up this contract. The description would be dividend for quarter ending this or year end this. And you know, the seller would be, you know, the issuer of the token, the original issuer who's paying the dividend. The amount would be, you know, a negligible amount. Your collateral would be all of your tokens, and your token issuer doesn't have to issue collateral, right? Because this ain't that kind of thing. And you could add comment or some information, you know, send me financial statements to this email address or whatever. Thank you for being so awesome and I love your lemonade or whatever. I don't know. Like you can include a comment right here, and you send the uh, contract to the issuer. Now, the issuer is going to wait until maybe like a couple days after all of these contracts are received. So these contracts, they would put like a time on these contracts for like a week. And the reason for that is you don't want somebody requesting a dividend, they receive the dividend, and then they transfer their tokens to another wallet and they pretend they're like somebody else with those coins, and then they get another dividend. So all of these escrow contracts would effectively be locked for a certain time period so that everybody at the quarter end can get an opportunity to open that contract and request their dividend. Now, if somebody doesn't request their dividend, they're not paying attention, they lose out. Okay, there's no chance of getting your dividend after that quarter end or year end if a certain amount of time has passed and all of these escrow contracts have been fulfilled. Your time is up. You can't get your dividend at that point. If you want to sell, that's fine. But if the dividend is paid, the market value of your token is probably going to go up because that's going to be attractive for people who want to hold a dividend yielding private token, right? So you just have to make sure you do that. And so that's how it work. Okay. And you know, this is some more information about how the contracts work, and you know, you can look over all that. But that's effectively how this would work. And there's also an idea I have for Zeno bonds. And I actually just recently tried to create a Zeno bond this morning, but I think there's something wrong with I think there's something wrong with how it is I'm setting up the confidential asset name, because um, my thought was you want to create a bond. right? And you want to put the terms of the bond in the name of the token. Okay, so let's draw another line here. We have stocks up here and we have bonds down here. So Mike's Hard Lemonade Stand Corp, they want to, instead of raising equity capital, they want to raise debt capital. And so they create a Zano bond. And that's going to be perhaps a similar ticker as the Zano stock tokens, MHLS, BND would be maybe, or BND1 if they do multiple issuances, and the next one would be two, etc. Maybe that'd be the ticker. I'm not sure if you can include numbers in your ticker, to tell you the truth. Maybe that's why I'm getting an error. I'm still trying to get with the team on this. I'll give an update later. But in the token name, you would put, the face value of the bond, $1,000. I don't know if you can put a dollar sign. That's another question I have. Can you put a dollar sign in, the token name? And then you put, 6% for the interest rate. You put the term of the bond, which is 10 years, and then you put the date of the bond issuance. Now, I think you can look up on a block explorer what the date of issuance for the bond was, but that doesn't necessarily mean it's active at that point. You haven't necessarily issued it yet, because the term of the bond presumably starts when you sell the bond. And so, you would have it as of, let's say it's August 30th right now. Um, you would have it as of 9/1/24. Again, I don't know if you can put forward slashes in your token name. Hopefully the team can let me know. But you put the terms of the bond just out there in the ticker name. And somebody, if you're in the Zano private bond market, can see, when the maturity date is. Now, that's another question I had was, can you set up, when you set up private tokens, a maturity rate on the tokens? Like, can you have it be burned after an X period of time? Can you set up a burn schedule for your tokens? I hope somebody can answer these questions that I have. But basically, this would at least be the beginning of the term. And if it's 10 years, then it's going to end September 1st, 2034. Okay. And you could create your amortization schedule with all that, with the principal and interest payments you should expect to get. But you could also issue bonds, and your token amount would just be one, and you would sell that bond, and whoever's got that bond would be receiving the principal and interest payments. And bonds are usually semi-annually paid, but these bonds can be traded around. And same thing with the stocks. What would be ideal is, you pay your principal and interest payment. So for this, your first payment would be, just interest and then principal at the end of the year. So come March 1st, you'd have your first payment to be made, 25. I know this looks awful. And you would pay $60 in Zano to whoever's holding that bond, but you don't know who's holding that bond. That's the thing. And that'd be great if you could pay that $60 in interest, just as like an option in your wallet, and the blockchain knows who has that bond, and so you can then just send it to them. You just know who they are. But if they know who you are, again, you can do the escrow contract method, and they open up a contract with you. They prove that they have the bond by using that bond as collateral. You see that they have that collateral. You have their name now. And then, because Zano and the private tokens that you have all have the same wallet address, you can just send them Zano to that wallet that they use in that escrow contract that they're opening up with you. The contract is fulfilled, and then you're good. Okay. And then, come 9/1, you're going to pay back some of that principal 10-year, that's $100 plus the interest 160. And I'm not going to get into amortization and all that. I've done my CPA work. I've done bond amortization. Never again. Okay, I'll use software for that. But um, that would be pretty much how it works. So you can have Zeno stocks, you could have Zeno bonds, and all this stuff could be ways for people to privately raise money on the blockchain for businesses that maybe they can't get traditional financing. Maybe they can't even open a bank account. Maybe they have an unconventional kind of business where maybe they're doing. I don't want to say that, but you know what I'm saying, right? But like, this is a way for private capital to be raised, which is pretty interesting. And I think this could be improved upon with different ideas and developments. And escrow contracts are still uh, not available on Zeno right now because of the recent hard fork with Zarkanum. They're still trying to integrate those things back together. I did use the escrow contracts before Zarkanum, and it was pretty nifty. But this is something that could be useful. This is something I think could be useful. So this took longer for me to explain than I thought. um, and it was the paint. It's the paint's fault. I don't know how to use this thing well, but um, I hope this granted some idea as to what we could do with private tokens. And if you have any ideas to contribute, I'd love to hear them. And let's figure out how to make private capital markets. I think that could be super cool. So that's all I've got for you. Uh, like the video, subscribe, all that kind of stuff. Talk to you soon. And Mateo out. God bless.